Hi, my name is Enrique, and here at Empower Brokerage, we have many questions being posed to us by our agents as well as their clients, which in turn they call us. So today's topic, I'm going to cover what are some of the pitfalls regarding life insurance. So one of those may be that many times people think that life insurance could be their one and only solution for retirement planning. So one thing I do suggest with any agent or for any individual that the life insurance that has whole life or IUL that builds cash value, this should be considered part, not all, of your insurance and retirement planning needs. Now, if you were to put all your eggs in one basket, well, I think you get the picture there. So by diversifying your retirement plan, again, life insurance could be used, whether through whole life or index universal life. Now, another thing to consider is, as far as a pitfall, is paying too much for that insurance, whether if it's term or permanent, but being careful that it does fit in your budget. So I always suggest to agents to do what's called a needs analysis to make the right recommendation for the family or for the individual getting the life insurance. But if the policy premium is not affordable, that they taper back the cost so that the individual can maintain that premium over the course of time. Worst thing would want to happen is that the person passes away and no coverage because they couldn't afford the premium or maintain the premium, I should say, and then the person has no coverage for the beneficiaries. So another one is relying on your employer's coverage. One of the things to keep in mind is that this type of coverage, life insurance being provided by your employer if they offer it, more than likely is not portable. In other words, you can't take it with you should you decide to change jobs or there's a downturn of any sort and you're no longer with the company, so you're not able to take that coverage with you. Sometimes that carrier may offer the ability to apply for the coverage, but then again, it's going to be based on your age and your health at that time. So with any individual, I always suggest complementing what you do have at your place of business as far as work, doing that needs analysis I just mentioned, and diversifying in this case where you have your coverage. So you can have part of it done through your employer, and then the one that you have with yourself as far as your own policy, it is yours as long as you maintain your premium payment. You have coverage whether or not you're with the same employer, you change employers, etc. So another thing to consider is failing to review your policy from time to time, or failing to review the coverage if it's adequate for your needs, or failing to review that it's time to convert your term policy to a permanent policy. So again, we're covering some of the pitfalls. So sometimes people like the idea of having different riders for their policies. So this one here is where an individual decides to add, say for example, a waiver of premium, or a child rider, or return a premium rider. So these type of riders do add cost to the underlying cost of insurance, in this case life insurance. So if there is a need and if there is a budget to sustain it, then by all means get the additional rider. But let's say, for example, that my children are close to being adult children, or they are adult children, then if I get the children rider, well, I'm paying for something that I really don't need, because again, the coverage is typically for minor children when it is a rider. So there are other things to consider regarding pitfalls, but I just wanted to review a few of those with you. If you have any questions or concerns, feel free to contact us here at Empower Brokerage at 888-539-1633.